Hi, everyone. Let's quickly talk about Lululemon's earnings report. Then we have the wholesale inflation report tomorrow, as a reminder. And then, boy, do we have some charts to go over today. And then we'll look at my results for the day and my positions going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Starting off with Lulu, this is a company I like quite a bit, but retail is definitely suffering. They have a lot of inventory, and Lulu is no exception to this. They offered weak guidance because people are just not buying the same amount as previously expected. And Lulu, of course, is a premium brand, so that's usually where people start cutting first. Sometimes you expect those premium customers to come through even in a recession because they just have money, and those are usually not the jobs that get cut. But it looks like even Lulu is suffering here now. The stock fell more than 7% after hours, so we'll look at those charts. And then on earnings per share, they actually beat expectations, earning $2 versus $1.97. They also beat on revenue, but the issue is their future guidance is not expected to do as well as previously thought. Comparable sales increased by 22%, which also was above expectations. So everything is growing, the company is still doing well, but the forward guidance is obviously going to be difficult with the pending recession and a large amount of inventory. This is a similar issue that Target struggled with when they had their big drop in the markets as well. Just in case you forgot, wholesale numbers do come out tomorrow morning. And as a result of that, the markets did move up a little bit, but then they started to go sideways. For me, I think inflation is going to come back a little bit higher than expected, or at least flat, which is going to encourage the Fed to stick with their 50 basis points hike. I don't know necessarily that this is going to affect the markets that much, but it should be a little bit of a precursor for the CPI data that comes next week. I went through that stuff a little bit quick because we do have a lot of charts to get to, quite a bit of data here. So starting off with the S&Ps, you can see up in the morning, gapped up actually, closed the gap, and then rallied back up to those highs, made new highs intraday, and then went sideways basically for the rest of the day, showed a little bit of weakness in the midday, couple of wicks here on the hourly chart. Does look like we're going to continue up a little higher. We didn't quite get into that 400 range that I thought the S&Ps might get into. I do want to put this trend line on here so you can see kind of that zone right in that 400 area. If we do get into this area, I do expect rejection, which would also coincide with the lows here from this double topping pattern that we had. Come into that previous low, similar to this price, get rejection, might get a stop here at 398. Do have to pay attention to this level here, but usually it goes to the deeper level, touch that 400, and that should give us enough liquidity to move back to the downside, in my opinion. Moving over to the NASDAQ on the 15-minute chart, similar story here. Touched the lows. This was a little bit of a sketchy moment. I did say we were going to go higher today, which we did, but this did look a little bit dangerous here for a moment. Hopefully you held through that. If you were bullish like I was, did come into resistance. I thought maybe this might hold. Pushed through it, touched that next trend line that we talked about yesterday. And then we're kind of moving through it here in the after hours. Certainly potential that this could do the same thing as I predicted on the S&Ps. Come into this level right at 386, 387. Previous lows here you can see on 5 December as well as 2 December here. So similar low levels. Wouldn't surprise me if we come into that zone, touch that liquidity, and then move back to the downside. But right now this still looks mildly bullish here on the NASDAQ. Moving over to the Russell on the hourly chart. Similar story, rally up, close the gap, make a high, and then it kind of sold off here back down to this lower level. Didn't hold up as well as the other major indices, but similar story here. Does look mildly bullish, and we didn't get all the way to the level that I expected. Came up a little bit short here at this first level of resistance, and I'm still anticipating that we come back into this zone, maybe push through it a little bit higher, and then get that rejection tomorrow. Moving over to Lulu, this is a stock I like and have talked about before. Back when it was down at this price range, a little bit below 300, we talked about it rallying into the zone. Thought we would get a better pullback here, but the stock just kept ripping and I couldn't really trade it at these higher levels. I don't think it was really worth that to begin with. When it gets back into 325, it's a little bit more attractive. Back down to 300, I think it's really attractive. And then if we get anywhere close to 260, 270, I do think that's a really strong opportunity here with Lulu. Of course, we have to be very cautious with this bad earnings report. Stock is going to move down. It's probably going to have some follow through. It wouldn't surprise me if we got all the way back down to these previous lows in a short amount of time. But if we do get a bottoming formation somewhere in this area, Lulu can definitely be back on my watch list for a potential trade. Moving over to stocks above their 20-day moving average, I want to go through these with a little bit of detail so we can see exactly what this looks like. For some context, this is the August high, and then this is the November high that we had here. You can see we stayed at those higher levels a little bit longer on this chart, so maybe a little bit more strength. But then we have this drop-off. It's very similar to the drop-off that we had here in August. So very sharp decline, slight retrace, about 2 days of retrace. So one more day, just like we're talking about. Come back into that resistance zone, and then we get the push down, which is exactly what we had here in August. So far, everything looks very similar to August, and this chart is confirming that in my opinion. Moving over to the stocks above their 50-day moving average. Again, similar story. We have the August high for just a couple of days here. Couple of days here, then we have a couple of days of sell-off just to get that first initial down move. Couple of days of sell-off, get a pause right at that level. 2 days of upward price action. Got 1 day of slightly positive, expecting one more day of slightly positive. And then we had the big sell-off here. So that move was quite a bit more substantial. There was quite a few days of downward movement at that time. So one more day of upwards and then downward price action. Almost seems fitting for the CPI data to come in a little bit higher than expected, staying at these elevated levels, and then CPI could be that catalyst that pushes us quite a bit further to the downside. And then looking at stocks above their 200-day moving average, I know we've talked about this one quite a few times, but it's worth highlighting the differences here. We have more stocks participating in this than we did in the August rally. We got to a much higher level, so we do have that divergence. Even though the stock market is lower, the number of stocks participating in the rally is higher, which to me indicates that I don't think we're going to make a new low. Certainly possible that we test the lows or make a higher low, but I don't have good evidence that we're going to make new lows quite yet. Moving over to transportation, I know we talk about it just about every video at this point, but it is a very good leading indicator. And today we went sideways. Did rally up, did come all the way back down to those previous lows, and then we closed basically flat from 2 days ago. So 3 days of sideways price action. It is not going higher with the rest of the markets. So we do have that divergence. Markets moving higher, transportation is flat. Again, another good indicator that markets are going to move lower even if they move higher in the short term. Moving over to XLP, consumer staples, actually showing some strength today. We didn't gap up quite the same way here on the hourly, down and actually test the previous day's lows. Then we got back above that resistance, became support here, and then we rallied into the close. So this does look a little bit stronger. Again, pointing to a little bit higher markets tomorrow, which is fine. We do expect that. But ultimately, I think this is going to fail. I think we maybe get up to around 76.70. Maybe 76.80, somewhere in this previous high zone. Then I would expect it to fail from there. Moving over to XOP, similar story, gap up, filled the gap, and then continued down. So lots of weakness here in XOP. This continues to go lower. No real bottom in sight right now. Maybe a little bit of support where we are, but we moved through this previous gap here. So we filled that. And then we have this bigger gap here, and I would expect that to fill as well, moving all the way down to about 126. And it's going to move quickly through here. So if you're long or you think you might get a bounce at this point, probably going to catch a falling knife. This does not look good for XOP and definitely not a sector to be around right now. Moving over to XLY, which is the consumer discretionary ETF. It's good to highlight here that we are going nowhere. This is the daily chart and we've been flat for quite a while. We have the October lows here and we did not rally into November like the rest of the markets. We actually have an August high, the move down. And then it did not participate in that rally that we had in November. It's basically flat, meaning that people are not spending money on consumer discretionary, and they are anticipating that recession that's coming. And consumer discretionary is always one of the go. People don't necessarily spend money here when they don't have to. And to the flip side of that, once we see consumer discretionary rallying a little bit in the future, that should be a good indicator that we're having a more broad rally, and it should be sustainable if we see consumer discretionary moving higher. Moving over to JNK, basically went sideways today, did gap up, filled the gap, and then went sideways basically at that same price. Got below it a little bit, closed above it a little bit. So basically in a holding pattern, waiting to see some direction here. Still mildly bullish in my opinion. We have the 144 down here on the hourly. We are above the 21, but we're below 5, which to me means we're going sideways until the 144 either forces it up or we break through that 144, and then we're moving down to the previous lows right around $91. Moving over to TLT on the hourly, you can see we had the big rally yesterday. Today, we basically went flat, started to cool off a little bit. You can see the momentum was downward on the MACD, but the stock price did not really do very much. It did look a little bit bullish here into the close. This certainly could go higher. The rally is still intact. Have not even tested the 55 here recently. Have to go all the way back to 30 November for the retest. And this still looks pretty strong. Moving over to the VIX, it did exactly what we thought it was going to do. We saw momentum was fading yesterday. It rolled over today. Not quite at support yet. Certainly could come back into this 2115 level, touch the 144 EMA somewhere around here, which is currently at 2139. So in this zone, 2115, 2130. Should be some support in here. So we do have a little bit more downward movement here. It shouldn't be an issue getting there by about midday, depending on what we see in that inflation report tomorrow. Moving over to my accounts, I did fairly well here, broke 70,000 in my individual account, which is great, just by a little bit. I'm sure it'll dip below that tomorrow. And then did make some money on that IWM position that I had going into the day yesterday. Obviously, I was bullish, so I did fairly well. Got back $164, which does not make up for the losses that I've had over the last few days in that account, but it's pretty good for this size account as well. Definitely could have traded the IWM a little better, but that's okay. It's good to make a little bit of money there. And then looking at my positions going into tomorrow, we got these 200 shares short that are going to get executed on these 286 puts. This is going to get executed, which ended up to be a pretty good trade. Got a good amount of profit back here on those puts. And then the shares will fill that contract. So good profits there on that trade from a couple of days ago. And then I sold a 286 and 287 call to get back into some short shares tomorrow if the stock market does rally into that zone. I don't think really we're going to get that high, but if they do, that would be a great price to short. So 286 was for $1 credit, so 287 is the actual short price there, and then 287 call for 70 cents credit, so 287.70. So an average price of around 287.50, 287.40, somewhere in that zone would be where I end up getting executed on these two calls if that ends up happening, which is quite a bit higher than the current stock price. I just don't think we're going to get that high, and if we do, I do think the bears are going to come in and start moving the markets back down. I do want to highlight, I also did sell a 283 call here for $1.70. I will get executed on that. Small profit here, but I did want to get back into some short shares, just one contract here. And I already sold the put against it at 283 as well. So $1.46 credit for tomorrow at 283. So I'm effectively buying the stock here at 284.07. I'm trying to buy back the stock here at 281.50. So that would be a great trade if the stock market did move down a little bit, but this will cover me a little bit to the upside as well. That puts my break even closer to 285.50, which should be the zone where we start to see some resistance if the market does move higher in the morning. Let me know down in the comments section what you think of my predictions. Seems like we're doing pretty well, and if you've been following along with these trades, hopefully you've made a little bit of money. But of course, there's certainly unpredictables that could happen. This inflation report could push the markets around in an unforeseen way, so I'd like to know your opinion. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading, and have a great day.